This is the Sattler Files.
And in business, the stock market fell through the floor today.
The stock market report.
Hard to know where
The stock market went through the roof today. No one seems to have predicted it.
With Kevin Johnson.
Welcome back to the Sattler Files, and I am talking with Kevin Johnson from the Argonaut Securities about the stock market. But good morning, first of all, Kevin.
Good morning, Tricia. Yes, another interesting day as we continue to have in this day and age.
Very interesting. BHP Billiton, full year loss, $8.29 billion, one of their highest losses recorded. What do you make of that? What's the reason behind that, and what's the impact of that?
Well, it's all about accounting treatments. We're discussing this in our morning meeting this morning here at Argonaut, that there's all these big numbers bandied around and no one blinks an eye. The shares actually went up yesterday. They're up again today, another 66 cents. And at the end of the day, the one thing about the market, and there's an old saying that the market's a barometer, not a thermometer, and it actually looks ahead. It's looking ahead to what iron ore prices might be, looking ahead to what's happening in the copper market and the oil and gas market in the US, and that's what's driving it. Where an accounting issue is something that happened in the past. It was as at the 30th of June, what was their assets looking like? What should those assets be valued at? And with various new accounting laws, now they have to revalue things at spot prices. So it's rather bizarre. It makes an interesting headline. It's still not a good year for BHP, no matter how you look at it. If you strip out the accounting issues, I think they only made $1.5 billion. Given the size of the company and the assets it controls, it would have to be seen as a disappointing year, but that reflects the commodity price downturn that we've had in the last 5 years, frankly.
And I guess that's why a suggestion put forward by Nationals leader Brendan Grills for a 5% mining tax, a proposal, in addition to GST, has raised eyebrows as well. Now, the view on that is that we're hitting an industry that's struggling, or he's trying to sort of, I guess, get blood out of a stone would be a way of saying that.
Well, I don't know if it's blood out of a stone. I mean, as I think McKenzie rightly, or the CEO of BHP rightly pointed out this morning, they pay an enormous amount of tax. They've done an enormous amount of development in this state. And these people who sit back and take a pot shot at an industry because it's making money, if it's making money, that means it's employing people, it's contemplating expanding. It needs to have a steady set of rules. You need to know what the rules are, what the environment's going to be. These are decisions made by companies and boards and CEOs for 10 or 20-year periods. You can't all of a sudden have the rules change on you a year later because some guy in the back of Northern wants to make a quick decision on something. It doesn't work that way. You've got to have the rules in place. The same thing applies to superannuation. We're always trying to change the super rules. How can we as long-term investors or long-term retirees be able to plan our futures if they're going to change the rules all the time?
And I
Look
guess
what you've done. You've got me started.
Yeah, no, it's a very good point, because I guess what some of those CEOs would be saying as well is, hey, look, we know what we're doing in our company structures. We know how we're driving our industry. You in government, you've acquired a $40 billion deficit by 2020, or a debt by 2020 through probably not doing as good a job as we're doing. So why would you hit us with a tax to try and make up for, I guess, in some ways, your poor management?
Essentially mismanagement. It's like I've heard some debate this morning about the GST take and then what West Australians got and how they're trying to ask for more. Well, frankly, we get paid GST every year, have done for the last how many years we've had the GST for. Why all of a sudden are they thinking they're doing a good job now and getting it increased? What haven't they been doing for the last 5 years?
How would you assess, and how would your industry, your colleagues, assess the performance of the West Australian government?
There's both personal issues and business issues there. I mean, the important thing is, from our perspective, in terms of involved with the resources industry, which is a key part of Western Australia, the important thing is they keep things the same, and I think they've done that very well, and there's been a lot of infrastructure spent. As a personal Western Australian, I love the fact that they've gone and built things, and that's what you should do in a downturn, is go and build projects. While the costs are lower to do that, the material's available, you're not going to get a blowout in budget, there's plenty of people available to do the job. That's a great thing to be doing. It gets my ticks all the time.
Right. It's interesting, though, isn't it, that here we have, Western Australia's always been a boom and bust, and it's probably too easy to say that, and probably not a very good way of managing our economy here. But we've got economists now saying, look, sell some assets, sell some of the things that you've built or you've created, because by 2020 you've got that $40 billion debt staring you in the face. Would you say that that's what should be happening, that some of those, the good times that we flog them off?
I think it's mismanagement on a grand scale. At the end of the day, Governments have an amazing ability to raise revenues, and the best way to raise revenues is have a good economy and have it growing, and then people will pay taxes and they'll pay state taxes or whatever it might be. And so to create a good economy, if interest rates are as low as what they are, they're the lowest they've ever been in the history of the world. In some countries, they're even negative. Why wouldn't you be borrowing and doing infrastructure spending at this point in time? I cannot make any sense of that.
All right, let's talk about foreign investment retiring Chief of the RBA, Glenn Stevens, saying, look, foreign investment should be for new assets. We should be investing or getting those investors to grow the economy. We shouldn't be selling off to foreign interests. What's your view on that? Is that something that Australia is too quick to do, is to sell off to the highest bidder?
Well, I think every Australian, first of all, Australians as don't own the assets. It's usually somebody else owns the asset, and they have a right, I think, to sell it to whatever the highest bidder is. It happens to be someone from overseas. As long as they're not planning to do something illegal on the ground, they should be allowed to buy an asset as such. But we were also discussing this yesterday about assets. Look, it's very important if an overseas group wants to develop an asset, like whether it be the Ord River or there's a wonderful prawn farm up in the Northern Territory, a local company's trying to do, they want to invest money in this country and develop those assets. Great idea. If they want to buy a farm and put more cattle on it and employ more people to run it and make it more efficient, great idea. I don't have a problem with that. It's a big country. There's a lot of country left after they've bought bits of it.
I guess it's more of an abstract thing, isn't it? Of we want to own our own land, we want to own our food supply, we want to own our farms and so on.
We don't own it. A family up in the Northern Territory owns that land. Another family bought this. Another generation of people or a company over there owns it. We, as such, don't own that land. We have the right to travel around on it and do whatever we want to do. But we, as this collective we that comes up, talking about other people's assets, I find a little bit bizarre.
What about if we're then tied to another economy, say a downturn in China? China's got major investments in Australia. Their economy faces a downturn. Are we then at risk because of our too close a link to a foreign economy?
No, I mean, we're always there's no doubt we're a pimple, if you like, on the whole world economic scale, but we're always vulnerable to other countries because we're an exporting country. So if people don't want to buy our assets, then sure, we're vulnerable. But if we manage ourselves correctly and keep trying to grow and keeping our biosecurity in place, we'll always be in a good place because the world is growing. It's growing at a very fast rate. They all need to eat good quality produce, which is what our country is very good at. They all need raw materials to build things, which our country is very good at doing. So I think we just got to keep doing what we're doing and stop some mismanagement along the way. And on the subject of Glenn Stevens, I mean, he's a fellow that kept cutting interest rates from, I don't know when, 10% all the way down to 1.5%, and he still didn't work out that didn't work. And now all the savers in the country have got no income, and they're still trying to cut interest rates and talking about it. So I'm glad he's gone, to be frank with you.
Is that right? Tell me more. Tell me more. I would like to know what would you have liked to have seen happen? What should, in retrospect, should he have done?
Everyone needs to get a fair return on their capital. So if they've saved up money, they deserve to get some income from it. And cutting it down to 1%, all you're doing is taking away the income of savers and pension funds and all the likes, and insurance companies that have no income. So therefore, it contracts the economy.
Why did he cut?
You need to expand the economy.
Why were the interest rates cut? What was the benefit? What was the perceived benefit?
Because they're copying everyone else in the world, and that clearly didn't work in all those countries either, because no country in the world's growing at the moment. Well, let's talk about the stock market today, because I'll get on another hobby horse. I've got so many of them.
No, I love the hobby horses. line them up, because we can really only interpret this, particularly people who aren't in your position. We don't know what's going on. We just have to go along with it and take the consequences. Because I guess a lot of people who've got mortgages would be saying, "Oh, we love that there's low interest rates." But so what's the right path?
Well, of course there's low interest rates, but and look, that's fine, but then what it encourages people to do is borrow more than they can afford. And, back, I sound like an old man here, but back when I bought a house,
back in the day,
20 or 30% deposit.
Yes.
And you had to be able to afford the repayments. You had to have a plan to repay it. Now they put up a 10% deposit, go and buy a $600,000 house, plonk down $60,000, and then suddenly without realising, they've got a $540,000 liability they've got to carry for the rest of their lives. I think that's a little unfair to offer that to people. But more importantly, if you're the person that's worked hard all your life and saved up, let's say $500,000 in your super fund, you get 2% on your money. You're getting $10,000 a year. You can't live off that.
What about
That's where the pain occurs, I think.
the view that we don't want people sticking their money in banks and leaving it there, that it needs to be out in the economy? Is this a way of getting money into the economy rather than having people having it in banks?
It certainly has that element to it, but then what you can have a problem is you create asset bubbles where something is offering a good return, everybody crowds into it, and things start to get overpriced. I think there's an element of that running through our economy as well.
Mm. All right, now the stock market report for today, stay on those hobby horses and talk me through it.
Well, that is my favourite hobby horse, of course. But, the stock market today, it's actually performing quite well. It was down early. I think when I looked at one stage, it was down 20, and if I have a look now, it was down 23 points, and now we've recovered and down 5 points. Commonwealth Bank, it shows a big down number there of $2.15, but $2.22 of that was a fully franked dividend today. So they're trading just under $74 as we speak. The other four banks are all up, Westpac being the best of those. They're up 30 cents to $30. There's lots of news out today, lots of company reports, lots of company reporting how they're performing and where they're performing. Probably one of the better ones today is Sonic Healthcare, the people around the pathology labs and the X-ray labs around this country. They're up $1.46 to $23.60, had a good result. Domino's Pizza, similarly yesterday, growing, planning to open another 300 stores.
Wow, really?
Well, they're up $3.68 to $77.79. They're doing well. Surf Corp, they get a lot of criticism from time to time, but people like their profit result. They're up 30 cents to $7.40. Crown Resorts are doing very well. They're up 56 cents today to $13.85. BHP are up 67 to nearly $21. Independence Group are rebounding today. They're up 11 to $4.10. Sandfire up 14 to $5.60. South 32 are going well. They're finally starting to perform. They're up 5 today to $2.07. If I look down in the mid-cap stocks, let me just have a look down there for you. Cardinal Resources are getting some outstanding drill results. They're up another 10% today, up over 50 cents now at 51. Cooper Energy a little bit better, up 8% today to 27. Berkeley Energy and uranium stock that we like here at Argonaut, they're up 6% today. They're trading at 81.5, so they're doing well. And looking further down the list, nothing of any real relevance. So all in all, we're recovering. It's gained another 2 while we've even been talking, Tricia. At this rate, we can send it up. But it's down 3 to 5,622. Gold price is holding very steady at $13.45 US, which with the Aussie dollar just down below 77, gives us an Aussie dollar price of right on 1,750 at the moment, which I can tell you is a very good number if you're an Australian dollar gold producer.
Wow. Isn't it interesting? The Domino's Pizza story is fascinating. Who'd have thought?
It is. It's a wonderful story. They've really used technology well, and good on them. It's a fabulous success story, that one.
I imagine that they would have...
And, I was actually out at a footy club function last night with my son, and everyone had Domino's Pizza, and I was standing there looking at it and go, this mob have really done well. So and there's some great, wonderful stories like that in the stock market, them and Blackmores and the A2 Milk Company. These things do exist out there, and it's fabulous to be a part of every day. Yes,
and people would be looking at Domino's, other people with businesses that they might have never thought would succeed in that sort of environment, and thinking, well, that might be the way to go, might be the way forward. It's a great story.
The thing is to embrace technology and not be scared of it. That's the key.
Oh, you're such a forward thinker. You're such a brave man, Kevin.
You have to survive in this job, I can assure you.
Yes.
Nice talking to you, Tricia. We'll talk again tomorrow, maybe.
Thank you, Kevin.
Thank you. Bye-bye.
Thanks. Bye-bye. Kevin Johnson from Argonaut Securities with the stock market report and much, much more. I'm Tricia Duffield, and this is the Sattler Files.
And in business, the market fell through the floor today.
The stock market report.
It's hard to know where
The stock market went through the roof today. No one seems to have predicted this.
With Kevin Johnson. This is the Sattler Files.